We're seeing volatility in gold and the dollar this Tuesday. Joining us now from the CME floor is Todd Bubba Horwitz. He's the chief market strategist with BubbaTrading.com. Todd, good to have you back on the show.
Daniela, it's always great to be here.
So gold managed to break through the 1250 level, but 1265 remains tough for the yellow metal, Bubba. What's impacting gold here today?
Well, you know, I think we see gold. We've looked at it, we've liked it, and we think it's strong here. I think you've got to really watch. 1280 would probably be an upper reach here for now. I think we go higher, but I think Christine Lagarde and all of her wisdom at the IMF, when she started talking about more negative interest rates, that's even driving more buyers into gold. So we could see the yellow metal move higher here because of those things. But I think you got to watch 1280. I like it, but I would like to see a little bit of a pullback. But these negative interest rates are going to create more buyers coming into gold.
Well, we also have a really volatile dollar right now, down earlier in the day, now back up. Do you think this volatility will continue?
You know, I think what you're really seeing is the dollar itself. The dollar index has been making lows every single day. You know, at some point there's going to be a dead cat bounce. I think this is what we're seeing here. I do believe that the dollar is going to make one more charge to the 100 before it does eventually give up the ghost, because I think really the central bankers around the world are doing so much financial engineering to engineer these currencies that they want to see the dollar fall as well, but they'll get one more push up to kind of help one of the other nations, because to me, they're all colluding together to make their currencies do what they want when they need them to do that, and I think that's what we're seeing right now.
And what about that yen-dollar trade? How closely are you watching this? Continued strength in the yen will be price supportive for gold, but should caution be expressed as Japan's central bank may intervene here?
Well, you know, I think what you're seeing here is a failure of Abenomics. This is very similar to what Ben Bernanke did here when he tried to devalue our currency. What happened? We went up and started making highs after highs. You cannot financially engineer, you cannot manipulate markets, because eventually free markets or true markets will take themselves over. You'll probably see the Japan Central Bank get involved here shortly, but I think this should be probably fairly short-lived. Remember, you had a lot of people that were short the end that are getting squeezed right now. They're being forced to buy right now. So after this is over, I think we'll see it fall back down again.
All right, let's talk silver now. I know you like it. It's finding renewed interest. It hit a 5.5-month high earlier today. What do you make of silver's run, Bubba?
I think silver looks great. I think it will continue to do so. Now, again, I would not be surprised if we saw a little bit of a sell-off here. Markets themselves don't go straight up or straight down, so I would not be surprised to see a little bit of a pullback, but I think you're looking at what we've been looking for all along, and silver's been a great performer. I look for this to continue. And again, if we go back to that interest rate market, if they continue to try to manipulate these rates lower, you're going to see more money flowing into silver as well, because that's another place people are going to go, because they really can't deal with what these central banks are trying to do, and they're really acting in accordance in really what I would call irresponsible by Christine Lagarde doing what she's doing or trying to do, making more negative rates. That will create more interest in silver as well.
Always good thoughts. Thanks so much, Bubba.
Thank you, Danielle. Nice to be here.
And thanks for watching. Stay tuned. We've got Kitco Senior Technical Analyst Jim Wyckoff up next.